All right, guys, so we're going to start in with the FAQs for Chapter 5, Intraday Chart Patterns. So I want to make sure I answer any questions that you guys have. Now, I think that a lot of what we talked about here, we've really been building up to this. And you've already seen a lot of these examples of bull flags, flat top breakouts, moving average pullbacks, and maybe even the 1, 2, 3, 4 setup. You've probably heard me talking about them in the chat room during my midday recaps. Maybe you've watched some of the videos that I've had on YouTube over the months and years. So this may not be completely foreign, but remember that these are only patterns. The strategy is how you trade the pattern and how you use that pattern to become a profitable trader. I really, really encourage you to be a master of one strategy, to really understand one pattern. Now, my strategy that I would say that I'm a master of is a momentum strategy. The momentum strategy includes the trading of multiple patterns, and that's okay. But you need to start with mastering one. And then once you've got that, you can start to branch out. But if you can master one pattern, like for instance, the 1 minute micro pullback and the 5 minute bull flag, say those two patterns, you could be an extremely profitable trader. If you just trade the 5 minute bull flag, you'll be a very profitable trader. If you can be consistent, if you can trade the right type of stocks, and you can keep tight stops and manage your risk properly. So Michael, I didn't talk a lot about exits today other than saying in general, your stop is at the low of the last 5 minute candle or 20 cents, whichever one is closer. We'll talk in more detail about risk and max losses in class 6, but for right now, your stop should generally be either the low of the last 5 minute candle or 20 cents, whichever one is closer. And it also depends on your profit target. If your realistic profit target is only 20 cents, then you need to have a 10-cent stop for it to be a 2-to-1 ratio. Richard, the volume bar, oh, and sorry guys, I'll move this up here so those of you who are watching the recast can see the questions. I forgot to do that. All right, so there we go. Let's see. So the volume bar is colored based on whether the candle was green or red. That's all it is. And you can turn that setting on or off, but I find it helpful because, in the case of Pran today, it's important to know that the highest volume of the day was on a candle that was red. I mean, that's useful information. So I think it's important to have that turned on. Karine, is the relative volume on your relative volume leader scanner based on the average daily volume for the same time of day? Yes, it does factor in if it's morning time and you're already trading 1,000,000 shares of volume and the average volume is 1,000,000 shares, that this is on track to be above average. So it is going to weight that differently and show a higher relative volume number. So Shell, yeah, I did talk about hidden sellers today, and that's something we're going to talk about a lot in class 10 when we get into hotkeys and level 2. But just to show in brief, CYCC was the stock we were trading today that we saw the hidden sellers on. And it was really interesting because it suddenly spiked up here to $6. And I'm going to pull this back here actually to a 10-second chart so you can really see the amount of volume that was going through at $6. So that's the cool thing with eSignal is that you can look at time frames as short as 1 second and have a chart for it even, which is pretty crazy. Okay, so look at this. This is, I mean, it's so incredible. See all that volume that went through there? Right at, almost all of that volume was right at $6. We popped up for a second to 605. That was over 160,000 shares of volume, and we couldn't break over the whole dollar by more than 5 cents. False breakout. Popped up 5 cents, dropped back down, and then anyone who was holding threw in the towel and gave up. So as we came up to 6, we realized that there were a lot of people selling shares. Now, they weren't selling in the form of an obvious 60,000 share seller like that example I showed you earlier. they were only showing like 6,000 shares because they can do an iceberg order where they just show you the top and there's all the shares underneath. So they can show 10%. That's the least that you can show is 10% of your actual order. So a 60,000 share order could appear as 6,000 shares. And when you see 10,000, 20,000, 30,000 shares of buying, 6,000 will still be there. And that's when you know there's a hidden seller, because obviously there's more than 6,000 shares for sale. So yeah, but again, we'll cover that more a little bit later in the course. Samurai, yeah, I mean, I've of course traded the ABCD 1, 2, 3, 4 pattern. I mean, I've traded all of these patterns that we're talking about. My favorite is the bull flag pattern. It is the one that I like the best. But one of the patterns that I probably make the most money on would be the 1 minute micro pullback, because the only time I take 1 minute micro pullbacks are on extremely strong stocks that meet 5 out of 6 of my criteria for having home run potential. So when I jump in those on a 1 minute micro pullback, like you saw in Pran, that often gives me the best entry when they're still at the very beginning of that move. But it's easy to miss it, and so the second best strategy is simply the bull flag strategy. Benjamin, there isn't a candle timer in Fantasy Stock Traders, but it is just the world clock, because every candle closes at the minute. So you could use any world clock to show you that. Manuel, I'll list all the exit indicators for these patterns when we talk about the strategies. That'll be in class 6. David, for buying stocks, how much volume would you consider a good volume for the 1 minute chart or the 5 minute chart? I don't really look at the amount of volume like per candle for each chart. That doesn't really make a difference to me. I'll look at the total volume on the day. And of course, I'd prefer to see it, above 250,000 shares, closer to 500 or 800,000. Over 1 million is okay. If it's like 40 or 50,000 shares, I really, for the most part, can't trade it, or I could only take really small size because it's just not enough volume. So 250,000 shares or higher would probably be ideal. Let's see. David, for buying stock, Lenar, due to the stop distance changing, for instance, 10 cents, 20 cents, the profit target changes, which is correct. Should we set different hotkeys for different profit targets? You can, absolutely. You can go into the simulator and set different hotkeys for different profit targets, either a profit target plus 10 cents or plus 20, and a stop loss hotkey of minus 10 cents or minus 20. So depending on the type of stock you're looking at and what you think makes sense, you can definitely do that. I would probably at the most use 2 different versions. So one would be 10 cent stop, 20 cent target, and the other would be 20 cent stop, 40 cent target. If you start having dozens of hotkeys, it's going to get confusing. Darren, there's no linking between SureTrader and eSignal, unfortunately. And Jim, okay, your question earlier had more to do with multiple green candles as the trade moves higher, where you got in the trade correctly. Many times those green candles, normally on the 5 minute, have some upper wicks or lower wicks. My question had to do with how do you ride out those shadows when and know when might be the best time to get out. This is a good point because that's totally true. Let's see, maybe HT. I'm trying to think of a good one. HTGM maybe. There are definitely times where when you look at the 5 minute time frame, you could say, look, this stock didn't make a new low on the 5 minute chart for 5 candles. But then when you actually look at those 5 candles, you realize that they had some pretty big wicks. This one's actually not too bad. This one, for instance. So maybe you say, oh, well, my entry point would be right here at $11. Well, this candle went all the way to $11.91, and then this one went to a high of $12.30, but had a low of 11.18, right? So that's a really big range. So inside this 5-minute candle, it squeezed up to 12.30 and dropped down to 11.18. And that's obviously a problem if you're in this at 11.04. To go from being up $1.30 to being break even, and then in the next candle, it goes all the way up to 13.25 and down to 11.74. So the truth is, a lot of times I will get stopped out on this type of move because it's not clean. You know, it pops up, it drops down, it pops up, and it's not easy to trade. That's the truth. The best setups give me, 20 to 30 cents almost immediately, so I can sell half because I've got my first profit target. So I take my money, I get out of the market. Remember, we talked today about how trading is kind of like spearfishing. You wait, you're calm, you're cool, you're collected, and then you see the moment, you strike. You get it, you get out, and now you're waiting. Calm, cool, collected, to strike again. So you have to be like that. And so that means on this one, I probably would have gotten 20, 40 cents, 50 cents maybe, taken half out, it drops down, I get out of the rest. Maybe it gives me a second opportunity to get back in, maybe not. To hold through that type of range, I would need such a small size that I wouldn't be annoyed that I just gave up. If I had 3,000 shares, I would have given up $3,000, right? So I'd have to have smaller size so I wouldn't feel like I'm giving up a lot of profit. And then with smaller size, yes, I could afford to hold for the larger move, but which is better? I mean, it's kind of like be aggressive on short setups or use smaller size so you can hold longer. You'd have to try both and see which is a better fit for your trading. But for me, it makes more sense to get aggressive, go in, get my profit, get out of the market. That's just kind of how I've always been about it. The best setups, though, I go in, I get it, and it ends up just totally opening up, and that's obviously what we want to see on every trade, but we don't. Sam, what is indicative that a consolidation would occur? Well, when the stock pulls back down to the 9 moving average, we have periods of consolidation. Moving average kind of flattens out. This is what happens after a stock makes a big move up. So we have a big explosive move up and then pullback, consolidation, moving sideways. So those periods are normal and they're to be expected. There's nothing wrong with that. The further a stock gets extended off of the 9 moving average, the higher the likelihood that it will need to have a rest. It will need to pull back because traders are going to stop buying it. They're just going to be like, look, this thing is too extended. It's crazy. I can't buy it up here. And that's where short sellers are like, look, this thing's so extended. I got to short it up here. It's going to come back down. You get the correction. We pull back down. If it's a strong stock, buyers will step up and buy the pullback. That'll propel it up to the next level, depending on the strength. This one obviously went from 320 to 410, basically in one push, just went from 0 to 60 and then failed. Other times they're more gradual, kind of moving up, pulling back, moving up and pulling back. Warrior Windows is only available on eSignal, John. Yeah, just in this platform. And yes, I only use mental stops right now, but I will encourage you guys in the simulator to use live stops. Press Control-T to set a live stop on your trade. You can also press Control-P to set a profit target, and I'm going to share with you the hotkeys in class 10 to put in live stop orders on your trades with SpeedTrader or SureTrader. Those are the 2 brokers that I have a hotkey that as soon as you send the live order to buy, as soon as it gets filled, it's going to automatically put in a stop order so you don't have to do anything else. Let's see. I have links in as part of class, I think it's 11 or 12 for my layouts for SureTrader and eSignal. That's part of when I do the platform demos. Joanne, Jen, yeah. Opening TD Ameritrade account and use send a check funding and then never send a check, they'll give you real-time level 2. Well, sounds like John's found a way to get real-time level 2, and I have real-time level 2 in my account as well. I funded mine with like $5,000 and then took all the money out. I think I have like 75 cents in that account right now. Enough that they still send me like a monthly statement by email. Um, Gary, what is your offset on your bailout hotkey? My offset is always going to, almost always, is 10 cents below. I do that to give myself room for slippage, which will happen from time to time, especially if I have big size. If I want to get out of the trade, I just want to get out. So the offset allows me to have that slippage. But I don't want to use a market order because I know if I do market order, if I accidentally type in the wrong amount, I'll get a crazy amount of slippage. If it does suddenly tank, I want to have the opportunity to try to ease my way out of the trade by selling on the ask or selling on the next pop. If I do a market order and for some reason it freezes in the system, you can't cancel it because it's been sent out, so you have to just wait. So I always use limit orders, and the limit is 10 cents below the bid. Mario, honestly, when I switched to eSignal, it was after the Alibaba IPO, and I was frustrated because the Alibaba IPO wasn't available on TC2000, and I was like, "This is crazy. How do you not have this huge IPO stock on TC2000? It's crazy." So I was annoyed. I complained. They said, "Well, I don't know. It should have been there. I don't know why you couldn't see it." I obviously wasn't able to see it. Otherwise, I would have known it was there. So I said, "You know what? That's it. I'm just gonna I was just frustrated. I said I'm just gonna try something different. I tried eSignal. I funded my account, and it has been great. Now I run eSignal right now on 4 monitors, and I have no latency whatsoever. When I would run TC2000 on 2 monitors, I would get lag. So that was my experience. That was several years ago, but that was my experience. And I mean, we can look. When was the Alibaba IPO? Um, might have been like 2014 or something. So, obviously, I'm. It was October 2014. So it's been 2.5 years that I've been with eSignal now. Obviously, I'm happy with them. I think the platform is good. I think it's actually better in a lot of ways. It is more expensive, so to me, I mean, it's just been worth the money to be able to run it on this many computers with no latency. But they may have improved TC2000 by now, and it may have been a problem with my computer more than anything. I don't really know for sure. So, long story short, TC2000, I think it's a fine platform, and I think you'd be happy with it, and it is cheaper. So if you're on a budget, I wouldn't hesitate to use it. And I will probably get myself set up with TC2000. I'll pay for like 1 month to give you guys a good demo of it during our demo class. Joanne, if you're not sure on level 2, go back and watch class 1. I think you might have jumped into this live class before watching some of the others. Corey, NAKD break of 250. I was watching it today. I saw it pop up. Let's pull this back. And this is what I thought. I looked at it and I was like, you know what? It seems a little extended on the 5-minute time frame, right? It seems like it just kind of all of a sudden squeezed up here. And I said, I'm going to wait for the first 1-minute candle to pull back. I said, I'm going to do the smart thing. And my problem was that the high day candle was red volume with a topping tail. And when I saw that, I said, you know what? I'm not going to get in right here for the second break over 250. I just can't. And I wouldn't have gotten in on this red candle because we didn't actually have the pullback yet. I was waiting for the pullback. So not a lot of move there. Like Roberto says, I don't think I missed too much. Let's see. Just make sure you're on the latest version. My version is 12.6.44. David, flat top breakout. Let's say there's 3 taps at 395. What is the entry price for the next breakout candle? It's 395. Flat top breakout because you've tapped that level once, and then twice, and then 3 times. So we're looking to get in at 395. And then, of course, we'd be looking for almost an immediate break over the $0.50 or the whole dollar. David, how do you determine when you sell half versus keep adding more shares? That's a good one. The right thing to do as a beginner is probably not to add because the risk goes up, right? If you're up 30 cents and you're adding to that position, you're screwing up your average and you're giving up the potential to take a little bit of profit. I only do it on stocks that meet my criteria, 6 out of 10, or sorry, 5 out of 6, 6 out of 6 for being a stock with home run potential. So it really has to have everything that I look for in order for me to be that aggressive. But I did it on Pran today. I added into the squeeze because I knew this was a stock based on the daily chart that had home run potential. Now, was I being a little aggressive? Yes, I was, for sure. Did it make sense to add for the break of $4? We hit the high of 4, we pulled back for a second, we came back up and I added, we broke over and hit a high of 410. It was risky. It was, but this was the type of stock that could potentially have gone to 450 or higher. So using my hotkeys, I felt confident that I could get in and get out quickly. So if it didn't work, I could back right back out of it. So if you're not at a place where you feel confident trading really quickly like that, then you don't want to add into these squeezes. You'd be much better off to take a little off the table. That's just more conservative. It's the better way for a beginner to trade. It's kind of like, first you have to, what's a good example of this? I'm trying to think of a really good example. Oh man, I'm trying to think. I feel like I've seen movies where the old man is kind of teaching the kid how to do something, and he's like, "This is the way to do it. You got to do it like this." And he like walks away, and then he comes back, whatever, a couple hours later, and the kid's like doing it this different way, and this different way is like even better and more efficient than the way the old man's been doing this for like the last 40 years. So you'll get to a point where you learn my strategy, and then maybe you can kind of put your own spin on it, where you start getting in at half dollars or whole dollars. You start scalping a little bit. You start getting a little more aggressive. You get a little fancy. That's okay as long as you first mastered the right way to trade it. So even in my trading, I try really hard to show you guys, to lead, sort of lead by example, to show you the best example of good trading. But at the same time, there are times where I will take sort of discretion to, be a little overly aggressive on this, or where I fall victim to, my own emotions and I do something a little stupid, get a little sloppy. So when you see me trading, just know that as much as I try to be a good example, there are times where I kind of deviate from the rule, and it's years of trading and intuition that allow me to do that. I think as a beginner, you really want to focus on following the rules first. Okay, so Manuel, do we buy at the resistance point of consolidation, or do we wait for the breakout and then buy? I buy at the resistance point. So if I'm looking at a trade, and let's see, I'm trying to think of a really good 5-minute setup that we've had recently. It's been a lot of like 1-minute pullbacks. Let me just grab a 5-minute setup from the chart, or from the slide, the class. Let's see. All right, so in this one, actually I don't really like this one. I don't like it because the price is too high. All right, so in this one, the first 5-minute candle to make a new high is over this level here, which is like 147. You could say that 150 is resistance because you can see how we tapped it once and twice, but I wouldn't wait for resistance to break. I would buy the first 5-minute candle to make the new high. In other cases, however, when resistance is the first thing to break and the new high is just over that, like at 555, that's the time that I will buy resistance. So this is actually, you've brought up a really good point that I hadn't made in the class. When we have a pattern forming, whether it's a 5-minute or a 1-minute setup, uh, I buy I'll buy the first candle to break, whether it's over the first candle to make a new high or it's over a critical resistance point, whichever one is first. So if the first candle to make the new high is going to be breaking over, 603, I would buy at $6 because I anticipate as soon as we get over this critical resistance point, we'll almost definitely make new highs on that candle. So yeah, that's a really good observation that you made. And I think I kind of even mentioned that on one of the trades I took the other day where I got in at like 62 or something like that. Or I got in at 60 just before the break of 62. And that's why I did that, because breaking over that dime even was enough of a resistance level because of the price of that stock. Again, though, as a rule of thumb, the first 5-minute candle or the first 1-minute candle to make a new high is the proper entry. So when you're looking, if that is very close to a $0.50 or a whole dollar, you could buy whichever one is closer, because as soon as a resistance level breaks, we get a squeeze. That squeeze will most likely give us a break over the first 5-minute candle or whatever it is. And when I say high of the previous candle, it doesn't matter if the previous candle was green or red. It just matters that the previous candle was lower than the one before it. If you call eSignal, they'll usually give you a discount over the phone. I usually decide a stock is no longer in play when it breaks below the 9 moving average. So this one here was still in play pretty much until down here. Even in this area, it wasn't great because the flag broke to the downside, but it could have curled back up, but it ended up failing. I haven't tried paper trading in eSignal, so I'm not really sure what it looks like. Yeah, they accepted a wire. Actually, no, I funded the account with a credit card deposit. I used my credit card, actually. And then I wired the money out of the account when I closed it. So Alejandro is using TC2000 on 3 monitors, no problems. That's good. $40 a month, yeah. It's cheap. It's good. It's not bad. That's the only reason I've thought about trying it again, just because I know it's a better option for most of you guys. So I might try it again and see if I can get it to work. You cannot use TC2000 on multiple computers. You need separate accounts. Subscription is I use the standard one, which is $99 a month. Yeah, that's for Trade Ideas. Standard subscription, $99 a month. $152 a month for eSignal sounds about right. Plus 20 for probably exchange fees brings it up towards 170. There have been, well, obviously Friday there weren't any good setups. Not really. Well, there was one good setup on Friday, but Friday wasn't very easy. Today was okay, and the rest of last week for the most part was okay. We did have some pretty good trading. I made 31 cents per trade on average last week, which was pretty solid, but I lost 30 cents on average per trade. So my profit loss ratio last week was 1-to-1, but my accuracy was about 65%. So remember, with 1-to-1, as long as you're above 50, you're break even, and at 60, you're profitable. We are setting that up on Fantasy Stock Traders to sync the 1-minute and the 5-minute so they're linked together the way these two are. And I'm sure by the time some folks are watching this recording, they'll already be ready. Sorry, Ben, I missed that question. Do I suggest investing in a trading station while you're using Fantasy Stock Trader? Trading station to the extent that you have a laptop with 2 external monitors, yeah, I would say that would be a good idea. You don't need to go overboard, but start with 1 computer and a couple monitors, and then just keep building them up as you need more space. Um, I wouldn't use eSignal for streaming data and trade ideas for charts. I mean, you could, I guess, but I would use, if you're using eSignal, you might as well use it for your charts and your data, or just use TC2000. I don't know if TC2000 has level 2 though. Um, you could let me know on that if anyone knows. Ilio, I always take out half once I'm up my first profit target, which is usually 10 cents. And that's, yeah, that, I mean, that's a really good strategy because when you get into that habit, you're in the habit of taking small profit. And then where do you set your stop after you've taken half your profit off the table? And I would scroll down, but it looks like I'm going to lose my place if I do that. So the right place to set your stop is break even. If you're taking profit prior to meeting the 2-to-1 profit loss ratio, one reduces the expected profit on the profit target, and that's true. And sometimes that happens because you see an exit indicator that forces you out of the trade. And if that's the case, then you got to sell, even if you only get a 1-to-1 profit to loss ratio. Hopefully, though, your average on hundreds of trades is high enough that it makes up for some of the losers because you, of course, have some of the winners that are much better and so on. And yeah, I'll just show you here on the simulator. You can open up multiple charts and just put them side by side. Open up another chart here. Let's see. And then I could just drag it and put it here. And then click here. So you can do that, but we're going to set it up so when you type the symbol in this one, it updates on all three that are linked together, because that'll be more efficient. And that's the way most of these platforms work, where you have these linked together up here, like this. Let's see. And yeah, you could definitely use TC2000 on multiple monitors. I had problems with it, but it's probably better now. It's been 2.5 years, so. But yeah, not on multiple computers at once without 2 subscriptions. So I actually have 2 subscriptions to eSignal, which is not efficient, but I do it because I have it on 2 computers. On the computer I trade on, I have it up because when I record my trading, I want to make sure there's a chart next to it, and I don't like the DAS Trader charts. I don't think they're very good. So I have 2 subscriptions, and it's kind of silly, but for right now, it works. Fantasy stock trading should be almost identical to the actual market in terms of you're getting the same level 2 feed. So sometimes the spreads will be slightly different. Sometimes order execution will be slightly different from real money because there's just differences between simulated trading and live trading that you can't really overcome, but it's as close as you can get. But if there's issues with the price not looking right, you can send it to me. On some of the more thinly traded stocks, the spreads will be a little bit bigger than is right. I've noticed there's some inconsistencies, but again, this is something I've noticed on all simulators that I've ever used. No level 2 on TC2000, so that's good to know. I mean, that's one advantage for keeping eSignal. Hotkey question. When you say stop at break even, is that the average setting? Yes, that's the average price. And the offset is putting number of cents above or below that price point. So if I want to buy a stock at 5 cents above the ask, I say ask price with a 5-cent offset. TC2000 is a charting platform, just like eSignal. It's a piece of software. Nothing wrong with using Thinkorswim for charts and level 2. It's really, they have great charts. They really do. Let's see. I added VWAP during one of the classes. I think it was class 4, and I left it on there. Um, it to me is fairly irrelevant. I mean, I just don't use it that much on my day trades, but it's on there now, so I'll just leave it there for the time being. I know some traders use it, so if I have it on and I'm screen sharing, it's helpful for them, I think. All right, so I got to put my exponential moving average back on here. It looks like I deleted it by accident. So I'll make that line a little bit thicker, and I'll switch to this kind of blue color. All right, so there's my 20. Should make that just a touch lighter. All right, so any other questions? So again, as we get into class 6, you'll start seeing a lot of examples of me trading bull flags, flat top breakouts, 1 minute micro pullbacks, etc. So these patterns will now make sense. These are the basis for the trading strategy, but alone they aren't a strategy. I always base my entry on the ask price because that's where we have sellers. So I want to see, is there someone selling at 355 where I want to get in? And the ask price will also tell me, okay, if my trigger is 355 and the ask price is 355, I want to get in at 355. That's the apex point. 352 is the bid price. I don't want to get in at the bid price. I'm getting in at the apex, at the breakout. Let's see. Shows 8 in the bar chart. Is it like 7? So right here, 5, that's 500 shares. 1 is 100. 8 is 800. That's the number of, yeah, you add 2 zeros, but 800 shares sitting at 344. Oh, Brian, I just said if you call eSignal, they'll usually give you guys a little discount over the phone. They used to give all of our students discounts, but then they changed ownership. They were bought out by someone. And so they changed all that stuff. Benjamin, I do trade when I travel. I traded for a week in France last summer, and I didn't have any problems. My wife was working, and so I went with her and just traded in the hotel room, and it was fine. She went to work all day. I walked around in the morning, came back around 2 in the afternoon to get ready for trading. Market opens at 3:30 p.m. there, so I traded, for the afternoon, a couple hours. Midday recap at 6 p.m. Then I went out for dinner, did the same thing, again the next day. So that was no problem. My internet was fine. I had no issue with internet speed. I traded for a week in California last year, going out visiting Jeff and those guys out there. No issues at all. No lag, no problem. I'll trade again when I travel this summer. I mean, it's just, it's not a big deal. It really isn't. The internet is so fast. I didn't notice any lag. I traded less aggressively because I was on vacation, because I was trading with my kind of mobile command center. I don't obviously bring all 11 monitors with me. I bring my external monitors, which I have down here. Let's see. Actually, they're not. Where did I put them? Oh, there they are. So let's see. I've got these two here. So I'm not using these right now, but I'll use them when I go away again. So this is my USB monitor, and I mean, you can see how thin this thing is. Like, I can put this in my, it's Asus, I can put it in my carry-on, no problem at all. So I've got one of those, and then I have a second one here. So I put these and I just put them side by side, basically. So when I'm trading, I've got my laptop in the middle and I've got one on either side. And I mean, it takes up that much space in my carry-on. I mean, it's literally like nothing. So I'll bring these with me and I'll bring two laptops. So it's not ideal. It's 4 monitors instead of 11, but it's enough and it works. So those are my external displays. You can get them on Amazon for like, I think they have a couple different ones with different resolutions. I think the expensive ones with like almost 1080 resolution might be like 180 bucks. The cheaper ones are 100, 120. So yeah, and I mean I've seen some laptops that show that they're gonna have like slide in, slide out type of panels. So these things are basically built into the laptop screen. That that'll be cool if that happens. I'll probably get one of those for traveling, but in the meantime, those are easy enough. But yeah, I definitely scale back on my risk. I don't want to have a huge loss when I'm on vacation, but at the same time, I don't want to not trade because when I take days off, I kind of feel like I start to lose touch with what's going on, what stocks are moving, what's happening, and I like to be in it every day. Even if I'm not trading with big size, just to know, okay, we're in a hot streak, things are good, or we're choppy the last couple days, or biotechs are strong, or shipping stocks are strong. If I take, a week off or 2 weeks off, I'll kind of like I feel like I sort of get a little rusty. Then it takes me a couple days to get back into it. I miss some stuff, and so it's easier to just stay in it. Yeah, I mean my trading station right now is really it's pretty. I mean for the most part it's pretty straightforward. I've got I don't think I can't show you around without disconnecting cables, but um, or I guess for those of you that are watching here, I can kind of show you around. Hang on, let me move this so I can see the camera. So yeah, so you can see, I've got basically it's 11 monitors. So we've got 1, 2, 3, 4, 5, 6, 7, 8, plus laptop, 3 laptops right there. For those of you who are watching in the live class. Those of you who are watching on the recording, I'll post some links to my trading station. And actually, I know I have a link here for my traveling station that I made a blog post about it. Let's see if I can find that. But, when I first started, it was like I had, just I had like one old monitor on a stack of books and then, added another monitor when I absolutely needed it. They were different sizes. Got an old computer that a friend didn't need anymore. Started using that for like breaking news stream and StockTwits and stuff like, or TweetDeck and StockTwits. I mean, it just kind of slowly evolved, and then finally, I placed like one order for 4 monitors at once, and I was like, I'm gonna just, upgrade. But that wasn't until I had been trading for years that I finally was like, all right, I'll spend the money, because I felt like I don't want to throw away perfectly good perfectly good monitors. I'll just wait. Okay, so here we go. This was me, let's see, in California last year, trading and traveling. So this was my 2 laptops, 2 external monitors, my same headset that I have now. So that was in California and San Francisco. This was trading in Rhode Island, 2 laptops, 2 external monitors. So that was the setup there. But it's pretty much the same setup whenever I go away. Fits into my laptop or my carry-on bag. I don't usually bring my headset. Um, I'm surprised I brought my headset to California. This thing is so bulky. I don't think I brought it to France, but now I can't remember. So, Lance, my slippage on Friday on the trade that I lost on, I think it was 20 cents of slippage. It was because I had 12,500 shares. So it was just a thinly traded stock that I jumped into on a micro pullback thinking it was going to go higher. And then when it turned around, I didn't stop out fast enough. I held and got stubborn. And then finally, when I threw in the towel, the volume had just gone, basically this is like the volume on Pran. This is the time to get in, this is the time to get out. I held it, all the way to like, you know, kind of this point here where there was no volume. So by that time, selling 12,000 shares was not easy. I mean, there just weren't buyers, and I got slippage. So that was the problem. I should have gotten out sooner. It was my own fault. I was being too aggressive or being stubborn. So close that one. Close this one. There we go. All right, and we could take a quick look and see today's biggest winners and biggest losers in the simulator. Net daily P&L. Len with 10,000 is our biggest winner. And winners today were 132 students versus almost 500. A lot of red traders today. Today wasn't the easiest day, I guess. This is interesting accuracy. I mean, I would look at this just from outside perspective and say there's a problem here with accuracy. We're seeing red across the board. We'd have to really look at, what are the setups he's taking? Why is this just, testing stuff out, or is this actually, this is the way he's trading? A couple big losses here. Cool, NVCR, both pretty high risk trades. Wonder what the end. So, and also a lot of trades. So over trading, I would say. Lots of trading. And, I'm someone who traded 3 times today. So I was pretty much like 3 trades in and out, and that was it. So something I'm definitely noticing there is some over trading from some of the guys who are red on the day. Green on the day. Let's see what Len traded. Golly, that is over trading. So lots of trades. I mean, I'm not saying he didn't do well. He did well, but that's a lot of trading. You would never see me take that many trades in one day. I don't even think it's possible emotionally for me to trade that much in one day. So lots of trades there, but good accuracy. So, he's doing well. I can't really fault him on that. This student, a lot of trades, accuracy, solid, really solid. One big trade on Cool. Some decent trades on the other ones. Couple good trades, small losses. This is what I like to see because it tells me that this isn't just luck. The losses are small. He minimized risk. The winners are $1,500 and 2,000. The losses are 700 each. So it shows me he's really, managing his risk. This one, pretty big loss on NVCR. I'd like to see those a little smaller. Nice consistency there. Holding $6,500 short, down $6,500 on CYCC because it's squeezing up after hours, right? So, we saw that one moving up after hours. He's short at, let's see, 463. Yikes. I mean, that's not good. 463 is like down in this area. He shorted early in the day, 463. This is up right now at 763. That's a $15,000 loss if that was real money. So definitely he's gonna get spanked tomorrow if this thing opens higher. But it's good that it's happening in the simulator and not real money. She's short CYCC also, short at 731. So it looks like she must have taken a trade after hours, 731, but squeezed as high as 815 with 5,000 shares. So she was down quite a bit on that before she came back up. What's interesting is that she's up 6,400 on it today. So her first trade was a short at 576 and covered at 528. And then she went long at 636 and sold at 717, which was great. And then she shorted at 731. Possible that that was an accidental short, but it may have been intentional. But this is why it's so important for you guys to use this tool. I mean, just to practice. You can experience almost the same things I'm experiencing, trade the market side by side with me, same charts, same data. The only difference is when you make these mistakes, it's in the simulator. You could practice here for months if you need to, until you can prove that you can be profitable in the simulator. You shouldn't trade with real money. I mean, it's really that simple. So you're still, almost all of you are still in strategy development phase, the first phase of trading, the phase that many of us don't even make it past. So take this time to develop your strategy, practice in the simulator, manage your risk on every trade. Trade the right stocks every single day, trade the right patterns, track your statistics in the Excel doc, also check your stats on the leaderboard, understand your metrics. What's your profit loss ratio? What's your accuracy like? And like Roberto says, trade it like it's real money. If you don't treat this like real money, if you start swinging for the fences and doing silly stuff, it's a game. And that's not how you're going to treat it when it's real money, so it's not serving its purpose. Treat it like it's real money, and then when you go live, you'll be really well prepared. All right, guys, so that's it for class 5 here. We're coming up on 3 hours and 15 minutes, including the Q&A. So good, solid class. Now, prepare yourself, because class 6 is going to be a long one. I know that class 6 is big. Last year when I taught class 6, I split it into 2 days, and I decided not to do that this year. I'll be asking myself why at the end of the day tomorrow, or at the end of class. But the reason in my head was that class 6 is one topic. It's momentum trading, and I want to cover it in one day. So that's what we're going to do. It's a 2-part class that looks like it starts at slide 370 and runs until, let's see, yikes. It runs until slide 400 and no, it runs to slide 500 plus. It is literally a 160 slides plus a lot of live examples. So it's going to be split up into several parts. So folks that are watching on the recording can watch it over the course of several days, which is totally fine. Those of you who are going to be watching it live, we will embark on the journey that will be class 6 tomorrow at 4 p.m. Bring your coffee, bring your notepad, and we'll dive in. That'll be momentum trading strategies. All right, guys. So I'll see you then. Well, of course, I'll see you first thing tomorrow morning for trading at 9:30 bell, and then I'll see you 4 p.m. class tomorrow afternoon. All right, that's it for now. I'll see you guys later. Thanks, everyone.